Welcome to this week's Petroleum News Update from PennEnergy. I'm Stacy Schmidt, publisher of PennEnergy.com. The aftermath of the Japanese earthquake, tsunami, and nuclear disaster continues to permeate the news this week. After more than a week, ExxonMobil has reopened its Shiogama terminal, delivering products to the earthquake and tsunami-ravaged area of Tohoku in northeast Japan. Additionally, the company has been working around the clock, restarting its 4 refineries in the country and even providing electricity to the Japanese grid from its power generation facility. The price of oil continues to trade well above the $100 mark, influenced by the Japanese disaster and the Libyan conflict. The gap between West Texas Intermediate and Brent crude seems to be closing somewhat. After the nuclear crisis in Japan, many countries are reevaluating their nuclear power plans. Should countries veer away from using nuclear power, the demand for hydrocarbons will likely increase for power generation purposes. This could support higher oil and natural gas prices, and some analysts are predicting a major rise in those prices over the next few months and well into the summer driving season. Price estimates are as high as $140 a barrel. This week has been highlighted with some major acquisitions and divestiture news. Supermajor ConocoPhillips reported that the company is looking to divest up to $10 billion in non-core assets over the next 2 years. Additionally, Energy Transfer Partners and Regency Energy formed a JV to acquire midstream assets of LDH Energy Asset Holdings from Louis Dreyfus Highbridge Energy for nearly $2 billion in cash. In the U.S. Gulf of Mexico, the BOEMRE has been more actively granting exploration and drilling approvals. ExxonMobil was awarded a deepwater drilling permit in the Keithley Canyon. Independent, ATP Oil and Gas was also given a drilling permit for a deepwater well on the Mississippi Canyon Block 941. In Gulf development news, Petrobras was granted final approval to use its U.S. Gulf of Mexico's first ever FPSO at its Cascade Chinook fields. Shell was granted approval for the first deepwater exploration plan since the April 2010 Macondo disaster. Shell's exploration plan involves drilling 3 exploratory wells in its Auger field offshore Louisiana. In shale news, U.S. independent Anadarko Petroleum has entered into a $1.55 billion Eagle Ford Shale JV with Korea National Oil Corporation. Under the agreement, KNOC will invest $1.55 billion in drilling carry in exchange for a 1/3 interest in Anadarko's Maverick Basin assets in South Texas. Also, in the liquid-rich Eagle Ford Shale, Enterprise has gained 2 additional customers for its under-construction crude oil pipeline in the region. This is Enterprise's 3rd major crude oil transportation deal in the Eagle Ford in less than 1 year. Brazilian independent OGX reported transecting a major oil column in its pipeline appraisal well in the shallow waters of the Campos Basin. Helping to prove connectivity between the accumulations in the area, OGX may have a mega oil producing project on its hands. Thank you for joining me this week. These stories and more are available at PennEnergy.com.